All right, we are going to continue here with ETFs in the second half. Just a quick blink at the VIX here. Round, mid-teens, pretty sad. I'd say we're getting close to some fairly important support here. This has been generally grinding down ever since the financial crisis. And nowadays, we just get these sporadic bursts of an organic market here and there. God bless them. And it's starting to be a while. We haven't had any real juicy movement since May 9. So we'll see how long they can keep suppressing this. It won't last forever. It will not last forever. So I would say around 14.5 is a pretty reasonable place for support. Anyway, moving on to the rest of the ETFs. ITB starting to, this is the home builders, I believe, but this is starting to sneak above this resistance. Real estate and home building has been incredibly strong this year. It's kind of jaw-dropping this late in the cycle, but yeah, it is what it is. Russell 2000, a favorite, always important. You can see here some nice clean reversals, both to the up and the downside. And then most recently, the lifetime high on this was ages ago. It's way back in August of last year. And we are well below that. And the line that counts right now is around about 153.23. We're clinging for dear life to the trend line of trend lines, the March 2009 bottom. Stuck right there. Everyone's waiting for a decision. The balance of this month will be very revealing. IYR, more real estate strength. Lifetime high close. Can you believe it? Would you have dared tell anyone in late 2008, oh, listen, the place to put your money is real estate? But you would have been right. It's gone from 15 to 90. That's 500%, I think, off the top of my head. Yeah, buy when there's blood running in the streets. Transports, IYT. It's got its own horizontal here, hemming things in, 187.06. JNUG, this is the junior, it's the leveraged junior miners, won't bother. Banking, still the prospect of a large banking top here. The pattern's only about 80% done, so it could absolutely fail. It could go either way. But so far, so good. You can see I'm kind of sweeping out this large arc. And it would really need to break the lows, of course, of Q4 2018 to complete that. But the jury's out. Mid-cap, very much like the small cap, IWM, I mean. Nugget, more another gold one. Not that interesting. And more dog activity. You get one per video. Here's some dog commotion, one per video. OEF, this is the S&P 100 ETF. Again, clinging exactly all week long to the March 2009 bottom. Clearly a very important trend line. The QID, this is the ultra bearish on the NASDAQ. So been grinding down for eons there from $8,000 to $33. The cubes, a little more useful. Just to zoom in here a bit on the cubes. Well, it's a bit messy. We need to stay below this blue line, which is 186.64. We're kind of in the middle of this range right now. So this one I feel a lot less strongly about than I do about, say, the small caps. Here's silver, SLV. Beautiful shooting star on this, and we reversed away from that, 14.05. So looking for weakness on that one. Semiconductors got walloped on Friday. Fell for pretty much peaked on Wednesday. And then, I beg your pardon again, Tuesday, Wednesday, Thursday, Friday. Yes, okay, so there we go. And we're down near what should be a supporting level. If weakness continues, then something larger is going on, because you can see head and shoulders right here. Left shoulder, head, right shoulder. If we start to mush down into this area, then yeah, it's worse. It's worse than people are thinking. The spiders, SPY, we are cleanly below the very important broken trend line. We peaked on this one on Tuesday, but it was, as I started with this one, I started with this one in the video yesterday, it was a pretty go nowhere week. Bonds, I say nothing about bonds these days. As important as they are, I have a real hard time divining anything charty out of them. On the bearish side of things, we are at this trend line, which is broken pretty badly, and we're also kind of at what could be a double top. But people have been calling for bonds to fall to pieces for more years than I can remember, and they just keep powering higher. And I could absolutely see TLT just we are very close to lifetime highs on this. It would not take much for it to just muscle its way past literally the 1.7% or so it needs to go to push to lifetime highs and dispatch with any notion of a double top. Interest rates are just, they've gone negative for trillions of dollars in debt. These could just keep powering higher. So I haven't traded these things in eons, but if I had to guess, okay, 6 months from now, higher or lower, I'm thinking these are just going to keep pushing higher. TNA, not much to say on that one. UNG, even less. UPRO, even less still. Oil, very important week for oil. We had looked at this level as a support, and that it bounced nicely off of that. We're in a big old range right now between that line and way up here at this price gap at 1172. So we're in this fat range. And as I wrote not too long ago, earlier this week, my view is that we will break this range to the downside and continue on with what's been a pretty long bear market for crude in general. XHB, again, home builders setting the world on fire. XLB, nothing much to say on that. XLE, this is energy. This is an interesting one because we have a pattern within a pattern here. We're beginning to break. Let's zoom in nice and tight. This is, my view, the reversal pattern. You can see here lower highs and lower lows in this descending channel. And my view is that in the weeks ahead, we will take out the lows that we saw late in May. Financials, critically important. Still beneath this broken trend line. And we've had some false starts here for the bulls, but they failed each time. We've still been in a persistent series of lower highs, very important. And so as long as we can stay beneath any sort of breakout above 28, this looks ripe for a diminishment. XLI, it's also industrials. I'm not sure what its constitution is, but you can see here too. I'll draw another horizontal to make it more plain. Everything in this zone here is forming another interesting pattern within a pattern, and a lot of cool charts shaping up. XLP, nothing to say. XLU, as I said earlier, utilities, they are just monsters, and really the one Dow section that has known no defeat since the financial crisis. XLV, XLY, XME, fascinating one, of course. We've got a whole series of rounded tops here, and we're beneath the fourth one that I've drawn in this. And the ultimate break, of course, would be a close below this blue line. This is a massive and fascinating long-term pattern. XOP, we've kind of talked energy to death. And then XRT, retail came out on Friday morning, and we've stayed below this topping pattern. So this looks very prone as well. All right, it's going to be a heck of a 2 weeks here. Fasten your seatbelts. Thanks for coming by.